Hi everyone, welcome to our podcast Pintar Uang Campaign. Before we get started, let us introduce ourselves as the host for today's episode. My name is Angel.
I'm Hendrik.
Hi, I'm Bella.
Today, we're going to discuss one of the most important aspects in the financial industry, which is wealth management.
In this fast evolving market, it's not all about savings, but it's also about long-term investments in different types of markets as well as assets. And also, wealth management is a very hot topic in today's market in the 21st century, as well as since the current market situation in Indonesia is very supportive and it increases the demand for the management of niche wealth.
To help us understand this topic more deeply, we are very excited to welcome our special guest for today's episode. Thank you so much for joining us today, Pak. Please introduce yourself.
Okay, my name is Dandi Hidayat Natanagara. I'm a head of investment in a investment management company called Anargya Asset Management. On a daily basis, I have to manage mutual fund portfolio investment and keep up with the economics and market news and make decisions for the well-being of the portfolio.
Well, welcome to Binus International, Pak Dandi, and hopefully could you please further explain about all your works and how you started it?
Okay, well, I actually started working in the capital market industry more than 17 years ago. I started working in the capital market industry as a bond sales in a securities company, and then I climbed the career ladder by becoming a fund manager, and then right now I'm a head of investment at Anargya Asset Management. I've gone through about 4 companies in the past, and well, here I am now, entrusted with managing more than 1 trillion of fund.
What economic or lifestyle changes have made wealth management more relevant in recent years, especially for younger generations?
Okay, maybe we'll compare it to what it was years ago, like decades ago. Years ago, people can rely on their income to self-sustain. Nowadays, with inflation and changes in consumptions and trends, people cannot rely solely on their incomes anymore. So they're going to need to manage their funds so they can self-sustain now. And how to do it is by managing how much they earn and preserving parts of their wealth by not using it for consumption and managing it into investment, something like that. And then the advancement of technology will make it makes access to information a lot easier for people now. So you can get information on investment really easy on that through your phone, and I guess it's one of the changes that would help people to start to invest rather than just saving their money in the banks.
Okay, moving to the next question. What are the main services typically provided in the wealth management firm?
Okay, the Usually people think that wealth management is simply about investing your fund, but it's not. It's just one of the steps in doing so. First, what we usually do is we assess the client's need, we assess their financial condition, we assess their risk profile, and what kind of risk they're willing to get into. And then after that, after we make the assessment, we will provide market insights to them. We'll provide data, we will provide information about what the capital markets are, what the investment alternatives are, what can they invest in, and then we can discuss about making the portfolio, and then we construct the portfolio based on what their needs are. And then after that we manage it, and maybe it's long run, but periodically we will evaluate the portfolio management, and we'll see the risk they're taking and comparing it with the returns they're getting. If changes are needed, then we're going to do so. We will reconstruct the portfolio, and then we'll manage it afterwards. So.
Okay, I do think a lot of people are questioning this. How does wealth management differ from traditional banking services?
Okay. Traditionally, banking only provide savings and lending services. Yeah, they're providing funding to the needs of the customers, while wealth management is a bit different. It's providing solution to their financial needs in the future, not just now, because traditional banking is day-to-day transaction in their current condition, their current operating needs, whilst wealth management deals with the money that they have now and investing it, so they will perhaps have more than what they have now in the future. So wealth management helps client in that aspect.
Okay. For the next question, what is the biggest financial challenges that an individual can face during managing their wealth?
Okay, about financial changes faced by individuals in managing their wealth. The first challenges would be discipline. Usually when a person is earning money, what they first do is spend it, and usually they spend it to almost 100% of what they earn. That's a habit that needs to be changed, actually, because what you need to do is make investment a bit like your spending, that you do it first right after you earn your money, and then you make spending for other stuff second. So I guess that is one of the challenges, financial challenges, that's being faced by people in managing their wealth. Also, the literacy about wealth management, because nowadays actually the information or the education about wealth management is very easy to get. It's all over the internet. You can watch it, you can read it, but some of them have not started learning yet, or perhaps they've started, but they only started very little, and they haven't quite master the ways of wealth management yet, and that is what's needed, because once you know about wealth management, it's becoming something that is quite easy to do. And I guess the challenge is to follow through with the wealth management literacy on individuals.
So, following that question, how important is financial planning for young adults and university students who may not have much capital to work with?
Okay, well, it's still very important, because wealth management does not start with a lot of money. Wealth management can start anytime with as small money as you have, because the thing you have to do with wealth management is not gaining all the money first, but with as little money as you can start investing. But the key is to do it periodically. The key is to do it regularly. You make a habit out of it. You do it perseverely, then you're disciplined in making investment on a regular basis. And because it is something that you want to grow over the years, not instantly. You don't expect your wealth to grow in a year or two, but you expect that you're making gradual growth with your steady investment over the years. So it's very important. It's very important now, because you still have a lot of time until maybe when it's needed. So I guess it is very important.
Thank you for your answer, and thank you for answering our general questions. Now we will go to the more personal questions, such as what inspired you to pursue your occupation as a wealth management in the industry?
Oh, okay. Well, actually, I started my career in the capital market just by chance, because that's the job I got when I first started looking. And then over the years, as I delve into the job, I become more curious about how things work in the capital market, in the investment industry. And the more I know, even the more curious I am about it, and how things work, how to, let's say, manage funds, how to do the investment operational on a daily basis, and how to beat the market is what I was most curious about, which is actually very hard. But that really keep me in the industry and keep me developing in the industry.
In your opinion, Pak Dandi,
Yes.
what qualities are important to become successful in wealth management?
I guess that's quite general, and the qualities you need to become successful in this industry is actually perhaps the same with any industry. At first, you need integrity, because you'll be managing other people's fund. It's other people's fund. It's a big responsibility, and you have to be accountable to do that. You have to be responsible. And then you'll need curiosity, as I said earlier, because because the market is ever changing. There are new rules, there are new regulations and policies, and you're going to need to keep up with that, and you'll need curiosity. You need the what do you call it? You'll need the willingness to keep striving, to keep developing yourself. And then other than that, you're gonna need a very good analytical instinct. You're gonna analyze the market. You're going to have to analyze data, market data, economics data, and then make decisions out of it. And so you gotta be rational also. And then, well, I guess that's it. Well, there are other qualities that would help, but I believe that those are the real important ones.
Okay. That's a great answer. Thank you.
Oh,
Now we will be moving to the next question, which is how do wealth managers risk and return their clients' investments?
I'm sorry, what?
How do they balance risk and return?
Okay. Okay, to help customers balance risk and return in the investment portfolios, risk and return in investment portfolios are inseparable. They always work tandemly. So in a way they are perhaps always balanced, because you cannot get great return without taking greater risk. And what we do is, as maybe I have explained it earlier, that we assess the customer's financial, their risk profile, and their also their liquidity and what they need, and we make financial decisions, investment decisions based on the assessment that we made. So it's about constructing the portfolio to be in line with their risk profile while trying to get the most return out of it. So what we do is we formulate the best portfolio that is in line with the customer's risk profile, and then the return would be the byproduct. It will automatically be by how we construct the portfolio. Okay, so ultimately successful investing is not about achieving the highest possible return. It will be about achieving the return necessary to meet the financial objective while taking the level of risk the client can comfortably live with.
Following that question, what investment trends are currently growing in Indonesia's financial market?
Okay, the growing trends. Well, among the younger retail investors, it's growing in numbers of young investors in products such as mutual funds, and it's growing in numbers in accounts to trade stocks and to purchase retail government bonds and ETFs. So I guess I believe it's kesadaran apa ya bahasa Inggrisnya ya?
Realization.
No, not in that sense. Yeah. Apa? Awareness. Thank you very much. So, okay, mungkin dilanjut. So young people now are more aware to the need to invest or the need to manage their wealth than it was years ago. So I guess it's a growing trend.
Okay. So how has the technology changed the way wealth management services operates today?
Okay, so technology has made for clients, they've made wealth management or investing more inclusive. The flow of information is free now, so they can access informations on market data, investment products, and they have the tool. Technology also gave them the tool to make their own analysis on investment, and it really helped them make investment and financial decisions. Also, for me as a investment portfolio manager, it has helped me with my work, for me to do it more efficiently, because there are things that I can do right now because of the advancement of technologies in the wealth management industry. So it really helped me a lot with my line of work, and it can help the consumer as well for managing their wealth.
So, based on your experience on
Yes.
Anargya, what are the common mistakes people make when managing their finances or investment?
Okay, the most common mistake would be not starting to manage their wealth. It would be to not start investing. It would be to maybe delay or just not investing. That would be one of the most fatal mistake people can do. Another common mistake is prioritizing consumer spending more than for investing, and what they need to do is to prioritize prioritize investing first, and then spending what money you have after you save and invest it. And then other than that, it's making financial decisions or investing in something without fully understanding them first, because sometimes investment products are made specifically for someone with a certain risk profile, for a certain risk tolerance. So they need to know the investment product that they're investing into, so it would fit their needs more perfectly. I guess that's the mistakes people do.
Okay. Then, with the recent decline of IHSG, what advice would you give to young investors?
Okay, the recent Jakarta Composite Index decline market corrections or the decline of value in market is a normal part of investing. It's a normal part of the market. It's volatile. What you need to remember is that you have to understand the reason behind the decline, like what happened now, because it might be driven in changes in economic fundamentals, some investor sentiment or government sentiment, and other are by external factors. And now what we're facing is due to sentiment from MSCI and other index provider, global index provider. And what you need to remember is making these decisions based solely on short-term market movements is not wise. You need to look at the whole picture. You need to understand and still see the potential that can happen in the market in the future, maybe near future or long term, and then you make your decision accordingly. So what I'm trying to say is that you need to analyze what's happening right now and what's going to happen afterwards, and make your decisions based on that analysis.
For the final question is that what advice can you give to us younger generation to invest and build wealth early?
Okay. Well, one thing you need to remember that managing wealth does not necessarily means you're building great wealth early. What's need to be done is you start investing early, and so you can it can grow. It can grow compound over the years, and you do it regularly. You do it on a periodic, monthly perhaps. And what's need to be done is you make it a habit. You do it. However the condition are, you make investment or wealth management a priority after you're earning your salary, perhaps. You don't wait until the last minute to make investment. So that after that, you invest in your financial knowledge. You find out about the investment products available for you, and then you learn about it. Perhaps you make analysis on the available investment products, and you can invest in what suits you best. And then well, you have to be patient and let your money grow, and in time it will grow beyond your expectations.
All right, I believe that was the last question we have for you, and unfortunately, we have reached the end of today's podcast. First of all, we would like to thank Pak Dandi for sharing valuable insights and experiences related to the wealth management with us today.
Yes, we learned a lot about investing, financial markets, wealth management roles, and more on. And thank you for everything.
No, thank you.
And of course, thank you to all of our listeners for tuning in. We hope this podcast provided you with valuable insights, and of course, encourage you to become more financially aware and responsible.
This is Angel, Hendrik, Bella signing off. Pintar Uang Campaign. See you in the next episode.
Thank you.